This is Helen.keit, the Key team at Keller Williams Realty Landmark here in Queens, New York City. And we're going to interview one of our professionals we use often. We have Tim Kennedy here, who's a reverse mortgage specialist with US Mortgage. So there's always a lot of questions on the benefits, the uses of reverse mortgages. So Tim, who's lived on Long Island for 30 years, been in the mortgage business for 25, and a reverse mortgage specialist for the past 10 years. In fact, he's only one of 150 professionals in the country that has this designation, a certified reverse mortgage specialist. So, welcome, Tim. We're glad to have you here with us. Thank you for taking the time.
Helen, thanks
And
for having me. I appreciate it. Thank you.
yeah, we're going to go through a couple of questions, things people always ask, and then certainly if I'm missing something, you hop in and elaborate. There's always a lot of misconceptions about reverse mortgages. So can you kind of clear that up for us? Tell us what we
Sure.
need to
So,
know.
yeah, it really is a shame what's out there with the misconceptions and the confusion regarding a reverse mortgage. So one of the biggest confusing things about a reverse mortgage is the homeowner gives up the home. So that's the furthest thing from the truth, right? As the homeowner, you always remain on title of the house, and it's always your home. You can do anything you want with it within reason, right? It's your home. It's always your home. That's probably the biggest misconception out of all the confusing elements of a reverse mortgage. What I like to tell people all the time: a reverse mortgage, in four simple words, it's just a mortgage. I currently have a mortgage, right? A forward. I call it a forward mortgage, and on the first of every month, I make a mortgage payment. Okay, with the reverse mortgage, you promise to pay that mortgage back, but you're not obligated to pay it back on a monthly basis. You pay that mortgage back when either one, you decide to sell the home and relocate, or the last surviving spouse passes away. You pay off the balance of the reverse mortgage, and any remaining equity in the home would go to the homeowner or to the estate if the last surviving spouse had passed away.
Okay, so here's a question I always have. What's the difference between a home equity line of credit and then
Okay,
the reverse line
okay,
of
great question. Great question, because you ever remember back in the day the Coca-Cola commercial? The taste
yeah.
test,
Yeah, yeah.
right? A or B, right? So I do presentations specifically on that. Okay, I put up a board. Who wants loan A? Who wants loan B? Loan A is a home equity line of credit. Okay, I need to see your pay stubs, your W-2s, your tax returns. I need to run your credit. I need to calculate a strict debt to income ratio. I need to have a FICO score over X amount. Okay, you're obligated to make monthly payments. It's not federally insured by the federal government.
Wow.
If there's a downturn in the market, the lender could reduce that line of credit or shut it off altogether. And then
Hmm.
I'll go to column B. Who wants this line of credit? Okay. Yes, I'm gonna look at your income. Yes, I'm gonna look at your credit. You're not obligated to make monthly payments. It's federally insured by the federal government. Okay. If there's a downturn in the market, that line of credit can never be reduced or shut down. The truth
Wow.
of the matter is, it actually has a guaranteed growth rate factor. It
Hmm.
actually increases as it stays on the line of credit. And what are the guidelines for that loan? You need to be one spouse has to be at least 62 years of age. It has to be your primary residence. You're obligated to pay your taxes and insurance, and you have to maintain the property to the best of your ability.
In the past, you mentioned federally insured. I think there were, well, you tell me, years ago, it was really a big gambit taking out a home equity line or a reverse mortgage line because they weren't guaranteed or people were being taken advantage of in that segment. Tell me, how are these all federally insured or do they need to be careful?
So yes, so the reverse mortgage, the technical name is home equity conversion mortgage. It's federally insured. Okay, what does that mean? Okay, federally insured. Okay, so what that does, that protects the homeowner or protects the borrower on two events. Number one, if the lender were to go out of business, that federal insurance, the federal government now, okay, will now be responsible, okay, for that mortgage, right? If you're getting a monthly payout, if you have a line of credit, whatever the case may be, they'll take over the responsibility of that reverse mortgage, right? Secondly, with the reverse mortgage, if you are not making a monthly payment, the balance of your mortgage will increase each month, right? Eventually, if you live a very long life, spend all that money, and maybe there's a downturn in the market and the value of your house goes down, there's a possibility that the balance of your reverse mortgage could exceed the value of the home. If that's the case, because of the federal insurance, you're not responsible for that debt over the sale of the house. The truth of the matter is, a reverse mortgage is a non-recourse loan. You're not responsible for any of the debt. The house or the home is responsible for that debt, not you, not the homeowner, not the estate. Okay, so the house gets sold. Whatever the house sells for pays back the balance of the reverse mortgage. Anything over that, the federal government's responsible to pay.
Wow, I think most people don't understand that. And that's a big factor today. A
Yeah,
lot of
it
times
sure
people
is.
took it out a long time ago and, they worry, what's
Yes.
going to happen? Do I have to pay that difference? Wow. So, in your viewpoint, what are like the two best features, of a reverse mortgage?
Okay, great question. So there's a lot of moving parts when it comes to a reverse mortgage, and a reverse mortgage is very flexible on what it can do for you, right? As far as taking out a lump sum, maybe setting up a monthly payment, setting up just a line of credit, okay, and using that at some point down the road, okay? So my two favorite parts, and we kind of just discussed one of them, is the non-recourse feature of a reverse
Mhm.
mortgage. You're not personally responsible for that debt, okay?
Really important.
Yeah, that's a key item. So, and I have this conversation all the time with the borrowers. You're not leaving any debt to your children or any responsibility of debt to your children. So if you were to live a long life in the home that you choose, okay, and at one point maybe the balance of that mortgage does exceed the value of the house, no problem. You have two choices. You can either leave the keys on the kitchen table, call the servicer up and say, hey, my mom passed away, good luck and God bless.
Mhm.
Or you could sell the home, pay back the balance of the reverse mortgage that the house sells for, and then the federal government would be responsible for the balance. Okay. The second thing I love about a reverse mortgage, and this is the part nobody understands or could even comprehend, and I mentioned it briefly before, a reverse mortgage line of credit has a guaranteed growth rate factor to it. What does that mean? That means, for example, somebody has a reverse mortgage line of credit, they have a $250,000 balance. Okay. They draw 50,000 from that line of credit, right? So now they have a $200,000 line of credit that they haven't used yet. That's actually going to increase
Hmm.
month after month after month. So in 12 months from now, that $200,000 line of credit could be $206,000. In 24 months, it could be 200,012, right? So it
Hmm.
increases as it stays on the line, as long as you don't draw it, right?
Mhm.
So I talk a lot about the 5 L's: longevity, right? People are afraid they're going to outlive their money. Liquidity, they may have money in the bank or equity in the home, which I call housing wealth.
Mhm.
Okay. Lifestyle, they're concerned about lifestyle. They've worked all their lives, they've done everything they wanted to do. Now they retire and their lifestyle is limited because their income is limited. Okay. Legacy, we talk a lot about legacy after death, but we tend to forget about legacy before death.
Yeah.
How do we want to be remembered in our remaining days, right? And then the last thing I always talk about is long-term care. So with a reverse mortgage and that line of credit with that growth rate factor,
Hmm.
okay, people can plan accordingly because those funds are tax-free. So instead of taking money out of your portfolio, paying penalties and taxes and maybe creating a sequence of return risk, okay, you can now take that money out of that line of credit that's been growing over the last 5, 10, 20, 30 years, whatever the case may be, okay, and use those funds for possibly those 5 L's, or more specifically, long-term care.
Right. I had no idea. That's amazing.
Yeah.
And this other feature I've heard lately, I'm certainly not aware myself, a reverse being used for a purchase.
It's unbelievable, right? I mean, it's a
It
well-kept
doesn't,
secret. Yeah.
yeah, who knows? I didn't know. Yeah.
So, and especially on Long Island, because Long Island is so expensive, right? And
Hmm.
you're in Queens, right? High,
Yeah, we do Long Island though too. Yep.
right? All high-end homes, right? So you have
Yep.
these couples, or maybe single, right?
Mhm.
In these homes, the houses are massive, the expenses are massive. Uh, they're afraid to move, right? Because they can't afford to move. And they're afraid to stay, and they can't stay because they can't afford it or they can't maintain it, right? I got 15 inches of snow outside, right? If I was
Yeah.
70, 80 years old, what am I going to do?
Mhm.
Right? And they can't afford to move either because maybe they're on Social Security, maybe they're pension, maybe they have a small income. They can't afford the mortgages today, right? So the whole premise of a reverse for purchase, if you had a client, okay, you could tell them, hey, give me the listing. I'm going to sell your home. Okay, let's use 500,000. I'm going to sell your house for 500,000. You're going to walk out of the closing, let's not count closing costs and commissions and all that stuff, right? They're going to walk out of the closing with $500,000 in their pocket. Okay, instead of them going out and spending 400,000 or 500,000 paying cash for another home. Okay, they can now purchase another home with a reverse mortgage. So pick a number.
Wow.
How much are they going to buy the other house for? You want to say 300?
Say 400.
Say 400. So now instead of taking 400 and leaving $100,000 in the bank, they can now take 200, put $200,000 on that house, and I then would refinance the balance of I would finance the balance of that $200,000 with the reverse mortgage, and they could move into that house without the obligation of a monthly mortgage payment, and more importantly, they're going to keep that other $300,000 in their bank that they're going to live off of.
That's that's what a value.
Yeah, and they can live
Wow,
in
what a solution for a lot of
and
people.
they can live in that house for the
Mhm.
duration of their lives,
Hmm,
provided it's their primary residence. They pay their taxes and insurance.
interesting. Yeah, paying taxes, insurance, yeah,
Yeah.
on any of these. Yeah. Wow. A lot of good solutions here. Tell me, how did you get this designation? And that so few have this.
Yeah, yeah. So, and it wasn't easy. I got to tell you, it
No,
took
I'm
me a
sure
long time
not.
to achieve. So, you have to have over 3 years of reverse mortgage experience. You
Mhm.
have to close a certain amount of loans to even qualify to apply. Okay. I had to take 12 hours of a continuing education class, specifically on reverse mortgages. A 3 hour, I actually had to fly to San Francisco and take a 3 hour ethics class, which I had to renew every 3 years. And then I had to take I forget if it was 100 or 120 test exam that I had to pass. And then to maintain and continue the certification, I'm required to do 8 hours of continuing education a year. And then every 3 years, I have to retake the ethics class. So certified reverse mortgage professional, like you had mentioned, roughly 150 in the entire country. And you're in the real estate business.
I know.
There's
Yep.
tens of thousands, hundreds of thousands of loan officers out there, and there's maybe 150 that are designated certified reverse mortgage professionals.
I love it because it just means you're dedicated to improving,
I
learning,
get so
being the
excited
best
talking
you
about it.
can
Yeah,
be in this field, the same as we are with ours, with our designations. That's great because you need to instill confidence in this particular end of the mortgage business. And I know you do. That's why I'm so thrilled to have you and use you because over the years, I've had people come to me and their mother was taken advantage of by somebody. She was 90, she was 80 something, who knows what, a lot of things went on. So I'm glad to hear the difference. What else, anything else you can feel would be of importance here that we haven't touched on to the
I think
consumer?
I think the most important thing that people need to realize is, and when I said at the beginning of this presentation, is a reverse mortgage in four simple words. It's just a mortgage. And
Mhm.
if you really think about that, it kind of just settles things down because if you ask yourself a question and then relate it back to like a forward mortgage, oh, right. So, like you ever see the Tom Selleck commercials, the first thing he says is, oh yeah, take out a reverse mortgage, no monthly payments. Well, if you just think about that, say, well, somebody's going to give me money, I don't have to pay it back. It almost sounds not right, right?
Mm.
But the
Mhm.
idea of a reverse mortgage, it's just a mortgage. Yeah, you're going to pay it back. You're going to sign paperwork. You're going to sign a promissory note that you're going to pay it back. But you're not obligated to pay it back monthly. Okay, you're obligated to pay it back when you sell the home or the last surviving spouse passes away.
The last surviving spouse. Yeah, that's important. Sure. I think most people feel like you said they're going to come take my house away someday.
No,
So
furthest from the
that's a lot of certainty. Good, good options here. This is so good. Even the reverse to purchase. Oh my goodness.
Reverse
And
to purchase
that
is phenomenal. I was on a
amazing.
radio show last night, and
Mhm,
the host was a divorce attorney, gray divorce, right?
mhm.
And I'm sure you run into that as a
Yep,
realtor,
yep.
right? And what happens most of the time? One of them wants to stay in the home, right?
Yes.
And
Oh,
right, so they either sell the home and split the equity in the house, or one person stays in the house and the other person leaves. But the person that stays in the house, two things happen. They either have to refinance and give the half to the other ex partner. Okay,
mhm.
they're going to lose that portion of the income when that person leaves. They can't afford to live in that house. So why not take out a reverse mortgage? They can stay in the home for the rest of their life, right?
Mhm.
Before they pay the taxes and insurance. They won't have an obligation to pay a monthly mortgage payment, right? And the partner that's leaving can take their half of the house and go, right? So they call that a gray divorce, right? Over 60 or 67,
Mhm.
you know?
Sure, happens.
They're saying since 1990, people over the age of 60 or 65, divorces have tripled.
Yeah, especially after COVID, I think we'll have more. No, but the solutions, that is great, Tim. That is wonderful. I'm so thrilled to know you.
Yeah.
Certainly somebody who's like, certified and, up to the minute on this avenue, So that's terrific. I'm going to have all your contact information on
Yeah,
this
thank you.
piece, and certainly we look forward to working with you, bringing you to all our people, and we'll have this out to you. I thank you for coming. Thanks for your
Thank
time.
you. Thanks for having me. Appreciate it. Thank you.
Appreciate it. Yes, and we'll be in touch.
Thank you.
Thank you.
Guys. Thank you. Have a great day. Bye bye.